Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, May 18th through Friday, May 22nd, 2009. Well, as we get into this weekend technical analysis update, folks, I want to really focus on some key technical levels in the charts to watch next week. Now, we had an interesting week last week. Why? Because we had the first down week on the NASDAQ in 10 weeks, the second on the S&P and the Dow in a very, very long time, and you're finally seeing a little bit of a pullback from this monstrous rally we've seen. Now, the rally we've seen has taken the S&P, the NASDAQ, and the Dow up 30 to 40% off their lows in a short period of time. Somewhat unsustainable. Really, it's more of the momentum government trade, as Meredith Whitney put it last week in a fantastic interview on CNBC. Dead on from what we've been talking about. But long story short, it's happened. We have to adjust to it. We have to look for what's going to come from this. And I think we do have it all pegged out according to our nightly analysis videos for our premium subscribers. Now, what I want to do here in this video is talk about some main levels on the charts. I also want to go over the dollar and how the impact of the dollar is now becoming one of the main things in the market. It's one of the main driving forces behind everything in the market. Now, what we saw on Friday, anyways, was the Dow slightly lower. Now, it did rally earlier in the day. You can see this by the spiders chart I have up. You had that initial Friday push on Options X, as you can see right here. You opened basically flat, pulled back in a minor way, and then burst higher on a very, very, light volume morning session for Options X. And that's the interesting thing about it. Usually the Friday of Options X, you have a lot more volume in the market. We didn't have that much volume on Friday, at least in the morning session. Now, what you did see again is that push up right to the green trend line. Now, this green trend line has been a staple of our charts for many, many days. It's been working beautifully for all of us, and I'm going to show you where we got it from, as I always try to do. This green trend line ultimately stems from the lows going back to the 12th. And you see how that market came all the way back down and then rallied right off that level. That's telling you there's a key level there in the charts and you need to follow it. Notice how on the 13th, if you had shorted right into that push, you actually ended up making a sizable shorting opportunity and profit on that short all the way down, at least down to this trend line right down here. All right, so that level is still in play, as you can see. Well, why? Well, because it touched it right here and broke it right here initially and then bear flagged it right here. You have a mini bear flag off this down move. And notice that, please. You have a down move right here and then bear flag here yielding, or in spirit of really, bear flag, yielding a drop into the close on that market. All right, so same thing again on Friday. So this line is telling us this is a major line, anywhere between 89.90 and 91.10. That's this 20-cent range on the spiders, the SPY. And again, we're looking at the 10-minute chart pattern here, the 10-minute candles. And so anywhere in between the 10 cent, 20 cent range of 89.90 to 90.10, that's going to be a major level to watch on the upside. If we get through that, I think you could have a decent little bit of an up move, obviously back to $90.40 on the spiders, and possibly even as high as 91.92 on the spiders. Okay, so this level for me is what I'm mainly watching next week. All right, we're going to continue to follow this one. It's been a very, very firm resistance level up to this point. It looks to continue to be that way. Now, on the downside, the big one is going to be this one down here. Now, there's some in between, absolutely. You're going to have to continue to watch those. But this one right here, shown again on Friday to be a key level. Why? Well, because the market was trading slightly below it going into the close. And then miraculously, and I say that kind of jokingly or sarcastically, the market all of a sudden got a bid back above that level. As you can see right here, it tried to fall back below, was below here, got saved, was below or down to the line again, got saved into the close as a little bit of a buy program, almost a suspicious buy program, came in to the markets and pushed it right up above that trend line. So you can see how powerful this is, and I want to show you where I get this from, all right? This lower level, if we go back to the previous day or previous 2 days, on the 14th, you can see it touched that and then bounced right off of it. On the day before, it touched it, bounced off of it, and closed above it. All right, so you can see how this level is an extremely key level, all right, going all the way back to here, and notice this gap window. This is ultimately where you can get it from, or it even goes back further, but going back to the 4th of May, you can see how you pushed right here and then bounced right above it again and rallied up, and this was part of the rally that took us towards the highs of the current market recently. All right, so this is just showing you how this 88.50 right here is a major level. In my book, should you break that, You obviously will have clear sailing to 88, an even number of 88, but I think ultimately we're going to go down and test much lower lows if we do happen to break 88.50. But remember, it has to be on a closing basis because in a technical sense, they closed it on the 10-minute anyways below right here and here and here, but they were able to rally it up into the close. So you're really looking for a close on the daily chart, if you will, below that 88.50. You could even use the 60-minute chart, which I'll show you in a minute, all right? So we'll take a look at that shortly and see exactly what this market brings forth. All right, so that's your intraday charting that I want you to really watch for early next week as we go into the analysis and so forth. And again, if you really want your nightly updates that are going to go much more into the daily charts, the weekly charts, the monthly charts, and so forth, and obviously the 60-minute and 10-minute, you really need to join up the premium service, the Research Center, which includes nightly videos, pro trader watch list, daily market reports, technical tactic, hidden gems, you name it, they're all in there for your convenience. All right, now just to talk a little bit more about Friday's action, I liked the fact that we actually pushed up early and then sold off hard. And again, this was all a result of the dollar. I can't stress that enough. The dollar, you can look back to the beginning of this year, and every major move in the dollar has had a corresponding move in the markets to the opposite way. Now, why do I say that? Well, let's take a look at the UUP. This is the UUP from Friday. All right, so, and I can show you this every day, but let's just talk a little bit about this. So initially, the UUP opens just above the flat line right here, and then starts to sell off. Notice how it dips to about 10 or 11 o'clock. See the dip to 11 o'clock right here? And that's at the lowest point right down here on the charts. All right, so you know the dollar's selling off. When the dollar sells off, the spiders start to rally. Look at this, right up into 11 o'clock. So the dollar's falling, market's rallying into 11 o'clock. What happens to the UUP, or the dollar index that we follow here? It starts to rally massively, all right? So you have the UUP, or the dollar, starting to rally up. What happens to the market? Let's go back to the spiders. The market starts to sell very sharply and continually all the way down to around 3 o'clock. What happens at 3 o'clock to the dollar as the market starts to get a bid? The dollar starts to fall. So notice every corresponding move in the dollar here has an opposite move in the markets. That's very key because that's been going on, and that's telling us something. That's telling us that people, as a market goes, people are very worried about the dollar here. In fact, it's telling us that a weaker dollar right now is good for the markets. All right, now that will have an inflection point at some point. If the dollar goes obviously to pennies on the dollar being worthwhile with buying power, obviously that will have an inflection point. But this is a major thing. Just look at the day before. All right, dollar starts here, kind of zigzags right here, and then falls. All right, what do the spiders do the day before? Kind of market starts out flat and then rises. So as the dollar's falling, the market's rising into the close. You get a little bit of a pullback into the close. What's the dollar doing? Look at that, getting a little bounce. So the market's getting a pullback. So it really corresponds beautifully to any move in the dollar right now. And again, that needs to be telling us, got to watch Treasury auctions. You got to watch the debt of the U.S. as it's being sold. All right, there's a talk of a bubble bursting in those Treasuries, guys. You got to watch for that. That could be a big thing. These Treasury auctions, the government continuing to borrow trillions of dollars, our debt, our budget, and so forth, going up trillions and trillions. So you got to understand that the impact of these bailouts of the big banks, of the economy, are going to take its toll at some point. You got to understand that to be able to trade this market appropriately. You got to be able to follow the dollar. You got to be able to chart the dollar more than anything, all right? Why do I say that? Well, if you go to the daily chart on the dollar, you have to see this chart. And again, this is one of the charts we go over in depth on the daily chart, the daily charts on the research video in the Nightly Research Center. But knowing this chart and telling you what resistance is the dollar into, or dollar falling, what type of pattern is this, can actually tell you where the market is most likely to go. Because, by the way, folks, it's not earnings. Earnings, no control in this market. Near-term spike? Oh, okay, yeah, absolutely, near-term spike. But overall, will it come right back in if the dollar's falling or the dollar's rising or whatever it may be? Absolutely. Absolutely. So the control in this market is with the dollar right now. So almost, I would dare say, the most important thing you can do here is actually chart out the dollar. All right, you can chart the dollar, find resistance support levels, bear flags, bull flags, key pivot points, key pivot days on the dollar, and you will have a leg up in knowing what you basically get tomorrow's newspaper today. And that's what we try to give our subscribers in our premium services at InTheMoneyStocks.com. All right, so I strongly encourage you to check into that, look into that. This week, just going over briefly, We don't have a whole lot of economic data. You do have FOMC minutes on Wednesday, it looks like, and it also looks like some housing data. Crude inventory should be big. Initial claims, obviously, Thursday, and Philly Fed and leading indicators. But overall, very quiet week. Earnings-wise, you don't have a whole lot. All you have Hewlett-Packard and Home Depot coming up early in the week. That'll be big as well. All right, folks, as always, we hope that you come and join us. Go to inthemoneystocks.com to get the premium guidance, as always. Take care.